Hi, this is Shane with the Rational Trader. It is late Friday evening. I've got all the models running for the week, so I can do the daily video. I'd like to do an end of week review here, just real quick. This is the oil market today. This is very reminiscent of the oil market of old. Really violent, sharp moves and violent reversals, but there's enough there that you're interested, right? So the distance, like from here to here, we're talking 53.46 to 48. Call that 16. So that's 60 ticks, 50 ticks. Certainly something that it makes it worthwhile to be looking. So what I see here today is we're staying out of trouble. All right. This kind of stuff is what makes the market attractive. It's also what makes it dangerous. So people that aren't disciplined with their stops and things like that can get really hurt in this market. But after we get through this, if we sort of set this initial balance or this range, we start rotating around the point of control, and we don't want to get involved in this at all, and we don't, and that's perfect. There is up here we do climb up to the value area high, so we have an opportunity there. You can see the orange bars. The machine's looking. It doesn't see anything, so there's no trades there, but that is the right place to be looking, at the edges like that. Staying out of trouble here in the point of control through 9 o'clock. And then you get this beautiful fall here. And the problem here is, so you're breaking that support, right? So what we don't have is we don't have a nice low volume node there to help us understand that that's a good spot. It's not till much later, all the way down here. So I entered short here really late. And then I'm trailing it so tightly here that I picked up only 10 ticks there. So, and that was the only trade I took in oil here. So I have the rest of here. So here, again, staying out of trouble, grinding sideways here. And then that was it. So my result for oil, plus 100. For the week, let's see. This is the last 2 weeks. So this is 1126 is when I started the Rev 71 model. It's sort of the kind of a culmination of all the work this year that we're now applying to these markets that aren't so volatile that you can't trade them. That's the problem with the indexes right now. And let's see. So for the last 2 weeks, plus 910. And then for this week, it's just these 4 days because there were no trades on the 5th. That was that quiet day. That was a national day of mourning for the passing of President Bush. So let's see. We had plus 320, plus 130, minus 140. So this basically nets out minus 10 there. So this would be plus 310. So plus 410 on the week for oil. Gold. No trades today, so 0 there. And I saw something similar here where this is kind of ugly and jaggy, and what I like about what I see here is that we're staying out of trouble. So there's the machine's looking, but then there's nothing here to take, and you can see how kind of ugly that looks. It's really jaggy. This in particular is rough. And then again here, and so these are when I look at how I approach this is the stuff that worries me. When the value area edge is sort of grinding up and price is grinding up with it, you can get just eaten alive. But kind of the way we're structured now, we end up just staying out of trouble. So nothing there today. In the euro, especially for members, so euro shows plus 11 ticks, but really we have to basically throw out all the live trading, or it's not live, the simulated live trading for the last couple weeks because there was a setting error. So for members, the studies, this order management study, bar still canceled, enabled was set to no. Should be yes. So basically, this is the study that says after I place an order, how long do I wait? to be filled before canceling it. So if I place an order, X number of hours goes by, and if I have not been filled, then cancel. It was set to no. I must have turned that off for some reason while I was testing something and then neglected to turn it back on. This is why we test. So we'll need to either replay the last few weeks to see what that impact is, or just leave it and we'll sim through next week. It's interesting. I don't know if that's the reason. I haven't been real impressed with the Euro results, and they're not matching sort of the potential that I see when I look at the simulations based off models that are built through June. So again, I build a model with data through June, and then I run it against data from then till now, and it clearly shows opportunity in the Euro or in 6E, trading from the London Open to the U.S. Open and then stopping. But the last couple of weeks I just haven't really seen that. I've seen a losing trade here, a losing trade there. Today was the first profitable day, but again, none of it matters because the system was not set correctly. So we're gonna have to redo that. Let's see. Where is the Open? So here's the London Open here. This is just last night. Let's look at the trades. So trading back and forth in a range between the value area edges. Let's see that we're looking at the orange bars again. We get long here. What happened to we get long here. And I actually, where is that trade? Because I don't have the codes on here because I changed I had to redo the studies. I'm a little confused about where the code is, which bar this is signaling on. So I'm concerned that maybe that's a trade from earlier that's still executing because my settings aren't correct. So let's not draw any conclusions from that. One thing to notice is we are doing an add here. And one of the things we've been so the system will automatically add under certain conditions, and in this case we're giving back a fair amount because we're doing an add and then not getting the follow through. We are getting nicked, unfortunately, so before it does make the nice move. But this is a 20 tick trail, so it's trailing more than 20 ticks. It's too much for a single contract. And one of the things we've talked about is what we require is X number of ticks in order to do an add. You have to have a certain amount of profit in the trade before you'll do it. But sometimes you end up, you've gone really far, and then you do an add, and so it seems like we've been kicking around, putting a max level on that as well. It's tough. It's not an easy choice to make necessarily, because what will happen here is we'll do this add, and then we'll reset the break-even level will be something like that. The equidistant between the entry here and this point here, and then we'll reset the target based upon this new break-even level. And then when as the market continues, or if the market continues, then you can take advantage of that. You basically get back from a brief interruption there. So anyway, the idea here is that you use the profit from your initial position to fund a larger one, and so when you get these nice moves, you can really do well. Oil does that, but I'm trading oil differently. So the oil I'm trading, the stop is so tight that I don't think that this would work that well. Oil, basically the way the oil market is set up is to take advantage of that pop, that vicious move. When you look at the way, this kind of move where you just get in and just follow it down and trail it pretty tight. Whereas this concept of adding to your position and then trailing behind that is more for these cases where you're going to give the market more room to work for you. So I mean, it'll work with a 20-tick trail in the euro and gold, and when the market wasn't crazy in the Nasdaq. You'll get tagged sometimes, like we did here today in the euro, but the problem is that if you use a bigger trail than that, then you end up giving back too much on all the times when you don't get that nice move. So that's the trade-off that we're making there. All right. So that's it for today. Let's take a quick look at the calendar and make sure we understand what the rest of the year looks like here. So the next 2 weeks just normal, and then probably the last 2 weeks of the year, I'll probably just close the trading room. I'm actually out this first week of the year. We're going on vacation. The Christmas week. The cool thing about machine learning is that you can just turn it on. You don't have to sit here and watch, right? So the question is, should you bother? I'm not sure of that answer. You have to think about that, whether it's worth doing. Certainly the 24th and 25th, no. Maybe the 26th. 27th and 28th would be candidates. But it's kind of the same problem. You'd expect there to be a lot of people who are just taking off. These last 2 weeks of the year are generally good times to just take a break. So that's probably what we'll do. In any case, the next 2 weeks we're on, and then I think let's see. I'd like to see if by the end of this month, in other words, starting out the new year, if we're at a point where we're ready to trade the euro live, and we'll burn that in, and then we'll start looking at the next market. At some point here, the indexes are going to settle down eventually. I've been saying that for months, and eventually, when they do, we'll bring those back into the fold. For members, I've been doing some additional analysis on. And so there's two tiers of behaviors basically, and tier one is pretty nice in terms of the sort of profitability to max loss day ratio. And the problem is that if you were just trading a single market, that may not be enough. And so, but if you're trading multiple markets and the machine's just doing all the work for you, then I could see, getting 3, 4, 5 markets all trading just these tier one behaviors, and you just get what you get. You basically you're truly waiting for the good opportunity, the clearly defined signal in all the noise. So we're headed. You can see we're headed there. We got 2 markets going, and we've seen cases where, one of the nice things about multiple markets is that you can be down in one and up in another, and it smooths out that amplitude of the those days where you're if you're just trading a single market and you're down, then you're that's a loss for that day, and that can have a psychological impact that you have to deal with. Okay, that is it. Those are musings for today. I'm done with now. I'll see y'all on Monday.